Welcome to CFTC Talks. I'm your host, Andy Bush, Chief Market Intelligence Officer for the CFTC. Hey, please remember, there's a disclaimer at the end of the show that's important for you to listen to. Before we get to the show, I wanted to let you know about new research the Market Intelligence Bureau team at the CFTC is producing. We just released a piece on the structure of the liquid natural gas market and how it's impacting natural gas both here and abroad. Now, the next piece is going to be a deep dive on sharp price moves in the markets we oversee. You know, in that piece, we analyzed 2.2 billion transactions from 2012 to 2017 to get a thorough understanding of what's driving these moves. Now, you can find all of this research by going to our website at cftc.gov, clicking on the Market Data and Analysis button, and then clicking on the Staff Reports button. I'm sorry this takes so many steps, but I think you'll find it worthwhile. So today, we want to check in with someone who has been in the financial regulatory space and consumer movement space as a regulator, a Senate staffer, an industry consultant, and a volunteer. And she says, we've been doing it all wrong. Today on CFTC Talks, Jo Ann Barefoot from the Barefoot Innovation Group and co-founder of Hummingbird regtech. So a bit of background on Jo Ann, in case you haven't seen her at a conference on regtech or financial innovation, because I think she gets invited to every major one of these things. But she's been a Senate Banking Committee staffer. She's been the first woman deputy comptroller of the currency, and she served on the CFPB Consumer Advisory Board. And now she's the CEO of Barefoot Innovation Group and, of course, as I mentioned, co-founder of Hummingbird regtech, where she writes, speaks, convenes, advises, and thinks on technology and regulation both here in the U.S. and globally. Jo Ann, welcome to CFTC Talks.
I'm delighted to be here, Andy.
Great. You are involved in so many areas of finance, from fintech to regtech to all forms of financial innovation. I am just so grateful we could get you to come on the show today. But before we get to all of that, I wanted you to, I'm going to ask you to take a step back a little bit. And I wanted to ask you about your career, especially since, you know, you're a respected and successful leader in the world of finance. As you look back early in your career, what were the top 2 or 3, biggest challenges you had?
I think the biggest challenge that I had early on was that I started into this work when the world was turning to regulatory solutions in a big way. I got to Washington in the 1970s originally, and so there was a lot of optimism that we could regulate financial services and we could also embrace government programs that were going to solve a lot of problems that are very hard to solve, including consumer financial protection and financial inclusion. And I think that the biggest challenge was realizing at that time how difficult these tools are for achieving complex solutions like that, and also the cost of them. The effort was pretty new in those days, and when I look back on it now, I realize the enormous growth of the regulatory complexity and burden and cost. I don't think it's anybody's fault, but I think that was a blind spot. Although I like to say, maybe we were doing as well as we could at the time, but luckily today we can do better through new technology, which I know we're going to talk about.
Yeah, and I think, to me, it's also fascinating that you were, of course, as I mentioned in the intro, the first woman who was on the controller on the currency. I think that is just amazing. First woman deputy controller of the currency. I mean, what was that like? That must have been really groundbreaking.
It was groundbreaking, and I also was in that role. I was heading the original consumer protection unit and community development unit of the controller of the currency, the OCC, which really formed. So it was a challenge, I admit. There were a lot of people who were pretty skeptical of the whole thing, probably both me. I had long hair and so on, and also of our mission and whether it really should be integral to bank regulation to focus so much on consumer protection. Last month we celebrated if that's the right word for it, the 50th anniversary of the passage of the Truth in Lending Act. And it was sort of the first major consumer protection federal law that sparked this whole movement that we've had in all the decades since then. And we've just, it became the model, requiring disclosures and so on. And then over that half-century period, we have loaded more and more and more regulations on. And when you step back and say, how are we doing? You have to say we're not doing that well. Consumer financial health is not where it should be. You mentioned that I am a volunteer. I chair the board of the Center for Financial Services Innovation. And we've done a lot of research finding that most Americans are not financially healthy. There was a famous article a few years back, last year maybe, saying that nearly half of Americans can't come up with $400 to cover an emergency. And so you have to ask ourselves, how well are we doing with these efforts to protect and expand access for consumers, which I know some of that's not the first subject matter of your audience, but obviously financial services is completely integrated today.
No, I think it all, it's all part of this broader community for finance for sure. And I think, let me get to this question, because I think that you're getting at the heart of something that I want to get to. Because on your website, jsbarefoot.com, right after you say we've been doing all of this wrong, and to be clear, listeners, this is the collective we here, folks, so everyone, you make this point. We have a historic chance to do vastly better, mainly because technology innovation is suddenly transforming everything for consumers, providers, and regulators alike. So let's start broadly here before we get into the weeds. Give us a treetops view of your ideas here. What are your top 3 areas where you see fintech or innovation changing this relationship amongst these 3 groups?
Yeah. So part of it is what's called regtech. And regtech is used with 2 meanings. It can mean regtech for use by the regulators themselves, and also regtech for the industry to comply. And our current compliance systems and regulatory systems were all designed in the analog era when data was scarce and computing power was expensive. And really, all of it was originally designed on paper, even if it got automated later. We have the opportunity now to actually digitize it, set all that aside, and begin to start from scratch and use the power of digital technology, which always has the same effect. I mean, it may cause some new problems, but it also will make things better, faster, and cheaper at the same time, which has never been possible before in regulation. We've always had to choose between better and cheaper until now. So we can get easily 10x gains in efficiency for both regulators and the industry in compliance and regtech. The other areas I would point to are the transformation of finance through fintech, mainly through the mobile delivery channel. Mobile phones are the most democratizing force in the history of finance. We're gradually closing in on reaching everyone on earth with financial services in the phone. People no one would ever have built a bank branch for. Okay. And inexpensively to deliver so it can be profitable for providers in ways that were never possible before. And putting that together with better data for more inclusive underwriting and so on is just going to bring literally billions of people worldwide and hundreds of thousands in the United States into the financial system. And then last but not least, I think we're heading towards what the World Economic Forum has been calling driverless finance, the ability to use our smart devices as consumers or also as investors and other players in this ecosystem to bring us all the information we need, guide us in making good decisions, and do some of it automatically for us instead of having people struggling with learning the complexities of financial products or trying to amass enough information to make good decisions. We'll just be able to talk to Alexa or the equivalent thereof and start to get our problem solved, or even have them just take care of it without us even having to worry about it.
Yeah, those are great points. I always think about this era that we're in right now, where we have, if not right now or very shortly, we have infinite amounts of data at infinite processing power, at infinite speed, at a very, very low cost. And it's extraordinary how this is changing not only finance, but obviously every business sector and disrupting every business sector, because you have to think about what you're going to do with the data, what is it telling you. But to your point, and I think the thing that should be exciting for consumers is the ability to have, on top of all that, the assistance with having a service that could provide an ability to understand that for them and and help them make better choices when it comes to either their banking or their consumer, or how they get loans. All these things kind of wrap up together, and I think maybe that's what I'm hearing from you.
Absolutely, and the ease of the voice interface, which just sort of brings the answer straight to you instead of you having to search around for information and struggle to learn it, is really an enormous breakthrough, powered by artificial intelligence and machine learning, and then tapping into all of this vast amounts of new data. And again, I'm not saying this isn't going to bring new problems, but clearly it raises lots of challenges, especially for regulators, on how to protect privacy and cybersecurity and so on.
Right.
But the greater impact is going to be to the positive if we manage it right.
And I think that is a great point. Too often, all the headlines that you see are all the negative components of what's going on with innovation. And really underneath it all, there's just this explosion of ideas and creativity that's really exciting. Well, let me switch gears a little bit here. You were recently quoted in a Bloomberg article on the CFPB change from their Project Catalyst to Office of Innovation. And this is what you said. Fintech innovation is the most important thing facing the industry and regulators. We are in the process of digitizing financial services, and we don't have the right institutions, cultures, and processes that do that well. And it's that last phrase, I want you to expand on that a little bit, starting with the institutions part. What did you mean by what you said?
One of the key issues in terms of the institutions is that in the United States, we have, I believe, the world's most complicated regulatory structure in finance. We have 5 direct supervisors of financial institutions at the federal level, not counting the 50 in the states. And then we have another 24 federal agencies that are involved one way or the other. I would put the CFTC in that category as well. And this is very difficult as a system for producing rapid change. And the system was built to be careful, deliberate, risk-averse for good reason, which makes it slow. We need to figure out how to enable our policymakers and regulators to work together across these agencies. I'm not naive. As you noted, I worked for the United States Senate. We're not going to reorganize our regulatory system. We don't have the reason or the time to do that. So we're going to have to figure out how to lay on top of it some new models for collaboration and communication, rapid learning, and so on.
Mm-hmm. Yeah, that makes a lot of sense, and I'm really glad that our chairman, Chris Giancarlo, decided to create the Lab CFTC and bring Dan on. That was. I think it's just, as he says, as the chairman says, we're moving from analog to digital, and we're really trying to get caught up in this, and to the points that you made about how important it is and how fast things are changing. Let me continue on this question kind of targeting that I'm doing here as far as. We don't have the right institutions, but what about the culture as well? Is that something that when you're talking about culture, are you talking about within those institutions, or are you talking more broadly?
I'm talking about both, but certainly within the institutions. Financial services, again, is a risk-averse sector, and there are good reasons for that. It's so highly regulated. There are good reasons for that, too. I hope I don't sound like I'm not in favor of regulation, because I definitely think we need regulation. But it makes the the established financial institutions and their corresponding government agencies very slow and careful about changing. And we're just going to have to embrace innovation. And that means we're going to all have to get used to working more with trial and error and learning by doing, as innovators do in other sectors. And it doesn't come easily, but I am convinced that it's necessary, that you can't use the traditional processes to regulate. By the time you put something through a 2 or 3 year rulemaking process, it's not going to be there anymore in the environment we're in. We're just going to have to figure out how to move forward faster and try things and watch them closely and adjust when things start to go wrong.
Yeah, I think the
transition.
Right. I just think the adaptive nature of what you're suggesting is so important, and to not. To take the attitude of what happened in the 1990s in Congress, in which they had a choice. They could be overly prescriptive in the regulations that they put forward for the internet, or they could take a more outcomes-based approach. And I think they took the latter, and I think we were benefiting over and over and over today because of that approach. And I know that's something that we're attempting to do here at the agency as well. But I just think that, broadly speaking, I mean, you really have to be adaptive and to be willing to fail fast, right? Just like any entrepreneur. Yeah. and hopefully that presents an environment in which you do continue to get this innovation and creativity.
Yeah, and that terrifies people, but absolutely, absolutely.
Well, as you look out into the world in the universe of finance, let me kind of turn this question a little bit. What groups or institutions are actually getting this right, and why are they getting it right?
So I'll point to the CFTC for starters. Your agency really has been a leader. I don't say that to everyone.
Well, first of all, let me say I did not tell her to say that. I'm not paying her to say that, although I'll have to give her $20 later. But no, I mean, you're so kind. You're so kind. We're doing our best. But go ahead. Sorry.
It's really true. I have my own podcast show, Barefoot Innovation, and I had your chairman, Chris Giancarlo, on it last year as a guest, and I'm going to have Dan Corpine as a guest too. And I will never forget what your chairman said. He said is the most pressing priority, the most important priority for every regulator is to move its rule book from analog to digital form. It was such a clarion call, and I know he's put a tremendous priority on it, so I can't compliment you all enough for what you're doing. Globally, the world leader in regulators is the Financial Conduct Authority in the UK. They invented or adapted actually from the U.S. Smaller scale version, the so-called Sandbox Initiative, where they're running like a lab testing new innovation. And they've also put together a regtech unit, very small group, 7 people, but they've enlisted hundreds of people in the UK and really globally too, in helping them figure out regtech through a new design they've invented called a tech sprint, which is like a hackathon, where they bring together
you just
regulatory.
Went to that, didn't you? They just had one over. To expand on that a little bit, I mean, please tell me, like, what did you learn from that? That must have been so much fun. And by the way, both Jo Ann and I have had Nick Cook on from the FCA, and I think I learned more from your interview with him than mine. But but I really enjoyed that, and I was just curious because I know you were just at it. I talked to Dan a little bit about what he learned there, but I'm curious what you took away.
I took away 2 things. One was so the tech sprints. This was the 5th one that they've held. And again, they convened this cross-functional group, regulators, regulatory experts, tech companies, and so on. And it includes tech people who can write code. And then they take a problem and they talk about it in regulatory language and words like we're used to. And then they translate that into actual live coding of potential solutions. And this one was enormous, and it focused on anti-money laundering. They had 260 people in the hackathon itself and 400 people at the peak of it at the end, and had teams work together and say, what are the problems with AML? The United Nations says we are catching less than 1% of global money laundering, which is in the range of $1.6 to $2 trillion a year, catching less than 1% with our analog era technology.
Mm-hmm.
So we have to reinvent this. And so the groups there worked on starter ideas on how to share data differently, how to get data differently, how to identify typologies of money laundering and financial crime that could be shared without having to share the private information of the players, so that code can find the problems. You were saying earlier about the importance of moving toward outcomes-based regulation instead of highly prescriptive regulation. And one of the reasons we can do that today is because thanks to all this new data, regtech has the ability to measure outcomes and results and patterns that were invisible before. And therefore, we can really be transformative. Let me say one other thing about the FCA. They also did their last tech sprint last December was arguably even more revolutionary. They ran a successful experiment on what they call machine executable regulation, that is in changing a regulatory reporting requirement through code only. Putting a block of code into the database and getting back a correct report. A process that, traditionally is going to take a couple of years to implement, from regulatory change through the whole system and so on. They did it in 10 seconds, and everyone in the room erupted in cheering. And I keep saying to people, when was the last time we saw regulators and bankers cheering together?
That's right.
Never.
Usually they're like on separate sides of the room, right, and not talking to each other. So that's a great sign, and that's a wonderful thing. We think very highly of the SCA and obviously what they're doing there, and not everything's going to work out. I think Nick Cook would be the first to say that, but I think it's wonderful to push it in that direction. It really needs to get going, and I'm so glad that you kind of brought up talking about coding and blockchain a little bit, because I'm interested in your views. So I'm going to switch gears again on you on cryptocurrency world, because I know you spend a lot of time advising clients on what's happening in the space. But clearly this is, rapidly innovating area for finance, and there's a lot of firms that are trying to get their heads around it. So from where you sit in advising companies, what are you telling them about digital currencies and things like DLT or blockchain? Yeah.
So this is one I like to when I make speeches and talk to groups, I say there are sort of 5 enormous tech trends converging on us. And as you said, they're not financial, they're tech, underlying tech. And one of them certainly is blockchain and distributed ledgers. And I think, as you say, people have trouble getting their heads around this. It's one of the hardest areas because it's the most different, the most mold-breaking. Here again, the CFTC has been, I think, bringing real leadership to thinking about how to create the right regulatory stance that won't quash innovation as we look at things like initial coin offerings. But there's kind of 2 components. One is the speeding up of the payment system, which was part of the original invention by Bitcoin of the blockchain, the ability to move money on the internet. That is in the process of transforming payment systems of all kinds all over the world. We're going to have faster payments and more inclusive payments that are cheaper to run. And so every financial institution or financial company needs to be preparing for that. And then the distributed ledger technology itself, the blockchain, is also beginning, and we're at an early stage of it, to transform so many other areas. We're getting smart contracts, smart supply chains. People are starting to use blockchains to be able to prove that their marijuana growing business is both complying with, it doesn't have any laundered money in it and doesn't have any illegal marijuana in it either.
Oh,
the ability to trace the whole the whole chain in a way that is transparent to everyone who has access to it and can't be changed in retrospect. It builds trust into the technology itself. It's not happening yet on a big scale, but the larger banks are all working on how to bring this kind of technology into their back office operations, into their procurement, into their operational activities in ways that can just cut down on the friction and the time lost and the money lost. So it is really profound.
Yeah, one of the things that we've seen just recently is a couple of big agricultural deals. I think Cargill did one and Louis Dreyfus did one. And we're talking about moving like a big shipment of corn on a ship, the physical part of it. And it was in a closed blockchain with their banking and other financial institutions. But I think what's interesting about it, and I've kind of told this joke before, that the old joke in transportation like that when it comes to all of the documents is that you have one ship for the corn and you have another ship behind it with all the documents for the trade, right? It's just super inefficient. And I think that's what's exciting when we look at this, and the use of it is, as you mentioned, getting rid of that friction, making things more efficient, making capital flow more efficiently, where it doesn't just sit there not doing anything, that it can be used and distributed in a way that really enhances economic activity. Jo Ann, I lost you there for a second. You're stunned.
Can you hear me now?
I can. Okay, there we go. Obviously, that statement just floored you.
It did. Left me speechless. I agree with it.
Okay. Well, let me ask you one last question before I let you go. This has been delightful, so thank you for, again, spending the time with me. But what are you going to focus on for the next 6 to 12 months?
My little corner of this is that I have assigned myself the task, with many like-minded people, of trying to make sure that the regulatory part of all this change can be optimized. Not to perfection. We're not going to have anything perfect here, obviously, but that the regulators are going to be able to let the good things happen and keep the bad things from happening. They have such challenges, again, with privacy and use of artificial intelligence and so on. And so my short-term goals are to encourage a lot of cross-fertilization of ideas, especially among the U.S. regulators and the U.S. regulators and others in other parts of the world. There are many countries doing well besides the U.K. And all of our U.S. financial regulators do have innovation initiatives now, in one form or another. So I'm trying to help connect them up. And I'm also encouraging regulators to think about a change model that is almost like creating a regtech channel on the side of the existing system and making it voluntary for companies to opt into it if they would like to be regulated by sharing more data and being measured against outcomes, metrics that would be made clear. They maybe could be relieved of some of the measuring of their compliance inputs that we spend so much money on elsewhere. The regulators could say, if you, we don't care how you get there as long as we're sure that you've gotten to the right result. And if we could do that and begin to build it experimentally and optionally and watch it closely, it would prevent the problem of having to force change on the whole financial system, which, as you and I know, is very, very difficult to do. Companies could say either, we may not love the way we're regulated today, but we know how to do it. We're going to stay where we are. But others could say, no, I'll switch over and provide more data, plug in with an API potentially, and so on. So there's a lot of discussion about beginning to build something like that. Start small and let it grow.
Jo Ann Barefoot, CEO of Barefoot Innovation and co-founder of Hummingbird regtech. Thanks for coming on the show today. This has been so much fun.
I have thoroughly enjoyed it, Andy. Thank you for having me.
My pleasure. Hey, thanks for listening to our show on the future of fintech innovation with Jo Ann Barefoot. Remember, if you want to hear more podcasts, you can go to our website, cftc.gov, and click on the podcast button. or you can find us by searching for CFTC Talks on your podcast app on your phone. We'll be back next week with another guest on our quest to learn about the markets we watch. I'm Andy Bush, Chief Market Intelligence Officer for the CFTC. Thanks for listening. This has been CFTC Talks.
But wait, we're not done yet. It's time for a disclaimer. The CFTC is providing this information as a public service, and it is neither a legal interpretation nor a statement of CFTC policy. Reference to any specific product, service, trademark, manufacturer, or service provider does not constitute an endorsement or recommendation by the CFTC. The CFTC is not liable to any consumer or any third party for any direct, indirect, incidental, consequential, special, or exemplary damages or lost profit related to the use of the information provided or referenced in this podcast. Selection of guests on the podcast does not imply an endorsement of any particular individual or entity. Many individuals and entities provide similar services to those of the guest. The views and opinions expressed by the guests in the podcast are their own and not specifically endorsed by the CFTC. Moreover, the information provided in this podcast should not be construed as investment advice. Consumers should rely on their own inquiries as to accuracy and relevance of the information incorporated or referenced in this podcast and assume the entire risk related to its use. The CFTC is providing its interpretation of market trends solely to inform the public of a framework for projecting possible outcomes under different scenarios. If you have any questions concerning the meaning or application of a particular law or rule administered by the CFTC, please consult an attorney.